All right, welcome back for the episode of Carnivore Trade. Today is Monday, May 8th, 2023. If you're not done so already, please give the video a thumbs up, like, comment, subscribe to the channel. Come find me on carnivoretrades.com for swing trading alerts and analysis. Anyways, let's get into it today. So pretty much just a nothing burger. So really nothing's changed. Almost literally, like Spider's up just 33 cents. So that's basically an unchanged day. You see the Dow there down 15 basis points, and the Q's up just under 1/3%. So the Q's showing a little bit of relative outperformance. The semis are getting a nice bounce there. AMD had a really nice pop. And yeah, the AI train is still going, I guess, right? So, they had that big pop Thursday, then it came way off the highs, and it's been still going. So nice little pop there for AMD, and that's helping out the semis. See NVIDIA here now at new highs going back to January 2021. So it's like the bear market never happened. One thing right now here with the market, and I talked about this over the weekend on Wall Street for Main Street for the weekend video, but I'll bring it up here because it's very important. Right now, what you're seeing here is, again, with breadth, right? So if we look at let's look at the spiders. So basically, we're, 2% off of the February high. If you look at RSP, which is equal weight S&P, we're 8% off of and in fact, this is actually red today, in an up tape, right? So that's, again, consistent here. So down 8% versus 2%. Triple Qs here are a couple, percentage points, probably, what's 313 to 323. So, probably about 3% from higher, whereas we look at the equal weighted Qs, they're still lower. So that's down 3-4% from that high. Again, what am I talking about here? Well, we look at NVIDIA, right? We look at Apple, you look at Microsoft, Meta, and that's really it. I mean, you got a couple other oracles having a good run here, and that's helping out cloud. But even Google not doing that much. I got a nice pop today here, up 2%. Amazon, it's green, but well below the February highs. Look at Tesla, up 1% today. Had a nice pop on Friday too. That was overdue. It was really oversold. Nice little inside bar there action. And I did tweet this out a few times too. Inverse head and shoulders on the hourly. So nice little kind of pop there. But big picture though, it's down very significantly. It's down over 10%, well over 10, probably 15-20% since that February peak. What's my point? People are flooding into safe havens right now because we understand where risk is, right? So the Russell 2000, I bring up this every single day. Small caps are weak. That's a negative, right? The transports are weak. That's a negative, especially for the economy. Again, transport's down 0.75% today with a flat market, so definitely underperforming. Semiconductors are weak here, save for NVIDIA, right? And NVIDIA makes up a huge portion of the SMH now since it's such a bloated pig of a company. What am I saying here? Everybody's flooding into safety, but the problem is that safety area is not going to be so safe here. We're now in an environment where these companies are trading like we have 0% interest rates and we have nothing but tons of growth coming in the next 6 to 12 months. It's the exact opposite. We have rates going up. We have a lag effect in the economy from those rate hikes, and we have negative growth coming in the future here, in the foreseeable future. So these companies are trading at ridiculous multiples, and it's as if, it's ironic because they're the safe names because they're such big mega caps, but at the same time, they're horribly mispriced. And the market will come to that realization probably sometime in the second half of the year. But for right now, they're dragging the market up. But this is not a healthy rally, and we've really kind of talked about that ad nauseum. But, as long as the volume remains light, we had that little bit of a dip here in the afternoon. So we got some Fed data. They told us everything we already know. Credit's contracting. I mean, obviously. So we had a little dip here. But when the volume's light, look what happens. They just float it right back up. And no real issues here. There's no technical damage. But I think the bulls are kind of running out of time here. I think we'll see what happens with CPI. It's very reminiscent of December, November to December here, where we had this move. And if you remember, if you're watching the channel back then, I said, look, this is taking too long to break out, right? We have this consolidation here. This was resistances. Here's your resistance zone. And that's really like 4 days, right? And it shouldn't take a month to break through that area. And then we had that big pop that got faded, and then we curled back up and we blew off, had a blow off move, and then we fell 40 points on the SPY, from 415 to 375. Right now, it's like the same kind of deal here. If we look on the weekly, you have 1, 2, 3 weeks of consolidation that failed. It was resistance, or it's resistance now. And we've been here for 7 weeks now, and we still can't get through it. So it's kind of like, to me, but it's kind of getting to the point where it's like, all right, bulls, you kind of got to do it here if you're going to get it done. Again, they may just be waiting on CPI, but it's just taken a while to break out here. And again, this broadening pattern, this is not really bullish. You want to see range, if anything, you want to see range looking like this, like tightening, like an arrow, but it's like an inverse arrow. And this could be setting up to be a diamond pattern. So we'll see what we get here. Nothing's really changed from Friday. Obviously, price-wise, everything's about the same here. But again, those are kind of the issues I see with the market and the challenges moving forward here. But again, as long as they keep the volume light, they can hang us in here for a little bit longer. But right now, it looks like, to me, it's just I think bulls are kind of running out of time here on the clock. So triple Qs here hanging in there okay, like we talked about. Those just barely made new highs, I think, today. So 323.63, 324.04. Yep, so just slight new high there, new 6-month high. And again, we filled that gap, so we don't even really care that much about that anymore. You do have this gap up here at 329, which could coincide with a trend line hit here, right? So it's not that far off. There's also the gap window there at 326.84. Again, right in that vicinity, looks like a good sweet spot for the triple Qs. And again, it's, we talked about the possibility of us kind of wicking through that 20-month moving average. And currently that's what's happening. So we'll see what we get going into the next couple of weeks. But that's really what I'm looking at right now. Again, this is also a rising wedge pattern. So just be aware of that moving forward. As far as the Russell is concerned, red in a, mostly flat tape, down 0.25%. Still struggling with that 20-day moving average. I'm just not sure how much upside is in this. There's just, you got a bear wedge that broke down, and now you're consolidating below the moving averages. So I never like to see that there. Same thing on the weekly. This is not a strong, I'll just get rid of this. It doesn't even matter. But this is not a strong weekly pattern any way you look at it. Or monthly. So again, same thing there with the IWM. Not a good sign moving forward. And again, it kind of continues to illustrate the picture of breadth being terrible here. Dow down 20 basis points, struggling with the 20 moving average. Again, this can still get up to 343 and change. But that's really all I'm seeing for it. For the time being, semiconductors getting a nice little bid here above the 20 and 50 moving average now. So again, they're kind of back testing. And I lost my trend lines with that stock split. But it's kind of back tested. Well, not quite. I think I had it right around in that area. There we go. You kind of back tested the trend line last week, and now you're kind of coming up. So maybe we get one more higher high here, coming into a breakdown area. Again, AMD's holding up, Nvidia's holding up, which will generally keep the SMH green because they make so much of the weighting now. IGV here. Again, up just under 0.5%, nothing terrible here, but on the daily, I don't like this. You're still struggling with that 295 area. If this makes a move, I don't see it making new highs here. Maybe a nominal high, but again, it's going to need a lot of help from the market here because, again, this was a market leader, and then this kind of broke down, so it lost that bullish structure there. So a little bit of weakness here. The weekly pattern is still just fine. I don't see any problems here, but really it's kind of that monthly for me. So again, just not really a pattern of strength there. And again, that 20-month moving average will be resistance if it is tested, but that's really all the way up around 310, 311 right now. Anyways, transports here we already touched on, down 0.75%, struggling with that 50 moving average. It's been struggling with that 50 moving average ever since the breakdown, really. So we came back up here. We tried to get above it a couple of days, and then we broke down, and then we hammered on it here, and now we're backing off again. And again, you do have a kind of a wedge there. And remember, if we start to curl back down, this head and shoulder pattern can trigger. So it did trigger on the daily, it failed, but on the weekly, it's still valid because we never closed below it. So if we close below this trend line, that triggers that head and shoulder. So we'll be watching for that. But for right now, it's hanging in there okay, but definitely on the weaker side with lower highs. Again, this looks just like the RSP, right? So again, equal weight S&P, not in good shape. Dow Transport's not in good shape. Bonds here got hit a little bit today. So there's ZT coming back in. 2-year note yield got up to just above 4% there. So again, yield's just doing a lot of big picture backing and filling. That's really all we're going to make out of it right now. 10-year yield up 2.18% there, and the 30-year up 2%, making a slight new high there. But again, still just a big picture consolidation pattern, but yields have upticked a little bit. Again, if they start to continue to uptick, really uptick, that will put a lot of pressure on the Fed. But for right now, I don't see that being a threat just yet. Markets at the close here. So there's the closing bell. Again, a flat day. Spider's up 11 cents. No big deal. XHB still strong here. That's holding up well. ITB still strong. Just really overbought, extended, everything you can call it. Pulte Homes, parabolic. KB, parabolic. Toll Brothers, overbought. Lennar, overbought. But hey, what can you say? They're holding up well, and you can't. You got to respect it. So VNQ, much weaker again. Still just stuck in this range here, down 0.5% on the day. Can it get to 85.50? Yes, with a lot of help from the market. We'll just leave it at that for now. XLF backing off. So again, basically kind of kissed the 20 moving average today, and then came way off the highs. JPM had a nice little pump early and then came in a little bit there. So that did help bring it down. KRE here down 2% on the day. And look at Pac West. Pac West was up decently, and it, gave back all those gains, only up 3.65%, which would normally be a huge move, but obviously in this environment it's not. Western Alliance also came back in, but KRE, green to red day, not good, right? I know this is a good tail candle here, but you get up into this area, everybody who bought here is going to turn into a seller because that was a breakdown. So I don't see a lot of strength here in the banks right now. Same thing with KBE and the XLF. It's had a nice bounce, but you're still below those moving averages. So nothing great there. Weekly, this is just kind of bearish consolidation, right? Big sharp move down. Get rid of this line. We don't care anymore. Big sharp move down and then sideways to up. So that's kind of bear flagging. Broker dealers, really the same kind of thing. They saved it at the end of the day last week. Not the end of the day, but on Friday. But again, still a down move and still a bear pattern. So I don't like the financials here, and I would avoid them. So that's really that simple. And by the way, they may ban short selling on banks. So that's been in the works as well, and we know how that works out. So anyways, crude here continuing to bounce up 2% on the day. It did back off a little bit, but I like the pattern it's putting in on the intraday timeframes. I think this wants to test 75. But we'll see what it does here. A nice tail candle, really oversold. By the way, look at the RSI on crude here on the hourly. It's just funny. So it got oversold, right here, and then look at how oversold it got, and then you got all the way down here, and then look how quickly it got back to overbought. So lots of volatility there in crude futures. I think it does want to go set up for a move to 75. See that little kind of hourly consolidation there. If it does a little bit more of that, it should basically back test that upsloping trend line. After that, I would probably say neutral to bearish on crude. But right now, it's getting a nice little oversold bounce, and we'll leave it at that. XLE flat as a penny, literally. So nothing to say there. Again, 82 it can get up to, I would say. But that's about it for right now. XOP, that managed to scratch a 33-cent gain. Again, nothing great there either. I think these are all going lower. OIH, same thing. Got a nice bounce off a double bottom, but you don't want to see it come off, come that far off the highs here. Let's just look at the XLE actually intraday. Yeah, take a look at the daily or the intraday here. So we gapped up and it was just pretty much a pullback all day long. So not the greatest price action. So it looks more like a dead cat bounce than anything, but either way, most of energy greenish today. Crude futures were up. Nat gas getting a nice, that's the NQ. Nat gas getting a nice bid today, up 4.5%. So a bit of a gap and go there too. So it gapped up during Globex and then really just kind of took off to the upside. Not really seeing much in terms of news there. So, it had a nice pullback last week, put in a little doji there and then got a pop today. So we'll see what that does tomorrow. I don't see any problems in the intraday timeframes for a test of 230 potentially tomorrow. So no problems with Natty right now. DXY again, just hanging in there up 20 basis points. This still has to go test 100. Gold here, basically flat to positive. Holding trend, no real issues other than it's still overbought. Same thing with silver, no issues. It's just really overbought here and does need to correct. If you got, and some of you guys talking to me about metals and stuff lately. If you want to buy metals, like, don't buy gold and silver right now. Buy platinum. This came off the highs today, but had a nice back test of 1040. And broke that weekly trend line, and you have a weekly inside bar. If this matures, this is going to 1200. But really the better one, the best one, and I talked about this over the weekend and in the short video this morning, palladium. I like this here. Why are everybody's, you got to buy gold, you got to buy gold. You're chasing it if you buy it up here. Buy low, sell high. Buy when it's on discount. What's on discount right now? Palladium. 618 retest, 100-month moving average, back testing this breakout. I like this here. And this will play catch up. So, for gold and silver, obviously I'm a long-term bull, but wait for a correction. Like, you don't think you'll ever miss a move. Like, there's always another pullback. I remember back in 2020, people were saying, you got to buy Wheaton, when it was up here, you're going to miss out. And look what happened. It hasn't done anything since then. So don't think you won't get a pullback. Don't think you won't get a correction. Historically, gold does correct during recessionary periods, but it bottoms before everything else too. So be patient with it. It'll give us a buying opportunity. But right now, I like platinum a lot. So that's what I would be looking to, or palladium more so. That's what I would be looking to get into, just my 2 cents on it. Copper still a bearish inside bar on the daily below those moving averages. You guys know where it's going. I don't need to say it. Let's get over here to Bitcoin. So Bitcoin may be a little bit of a leading indicator here, as it has been, right, lately. Let's take a look. So it hasn't triggered yet, but you could make a case. You get through that and close below it. That's a daily chart head and shoulder. And so if that breaks, let's just draw this in here. And this is all if, right? We're not saying that. Let's say that breaks right there. That's where it's going to want to go. So right to that 22 handle, probably the 200-day moving average. At that point, obviously it's upsloping. So we'll be watching. That doesn't guarantee anything. This could fail. It could, wick through it tomorrow and then have a huge surge, squeeze up to 32,000. But until that happens, it's still okay. But it is interesting how it was down pretty substantially today. And it has been a bit of a leading indicator lately. You see it pretty much just selling really all day long. So maybe it's telling us the market's going to sell on CPI. I don't know. It's been leading by a couple of days. So we'll see what we get here, but Bitcoin a little bit on the softer side there. European markets, so Euro 50, again, pulling back here. We talked about 4,400 a few weeks ago. That's been good resistance. Maybe you can make a new nominal high if the spiders do, but that's really all I'm seeing right now. If we look at the UK, same kind of deal, although, it's going to be tough. I would say 79 is going to be pretty good resistance here on the daily. If you get through that, then you can test 79.85. But that's really all I'm seeing right now. Nice pullback. And, again, we talked about that level. It hit perfectly to the penny and then had a huge surge. I didn't think you would make that kind of a run here, but it's had a nice little dump over the last couple of days. But again, those are the levels I've got worked out for it right now. The DAX here, that actually made new highs, so that's holding up better. But again, we're kind of going into this area here, that double top. So you got some resistance here around 16.1, we'll call it, as well as that pivot right above that. But again, it's all about the spiders. The spiders come in, these will all come in. If the spiders go up, these will go up. So, you can keep it pretty simple for the most part with these markets. Anyways, back over to the spiders. Again, nothing's changed here. I think market's waiting on CPI. Honestly, you guys know the levels. This is your resistance. You break 404, we're going down. So we keep it that simple. Anyways, guys, can wrap up here. You guys take care. Don't forget to subscribe to the channel, like, comment. Come find me on carnivoretrades.com. I'll talk to you all tomorrow.